Let's take a look at how the tech giant is moving this morning. Apple shares, they are down right now by about 0.7%. Today, KeyBanc downgrading the tech giant from overweight to sector weight. Analysts there citing weaker near-term iPhone sales and a muted upgrade cycle as reasons behind the move here. This is particularly interesting in the note that came out this morning as well here. And one of the things that was particularly noted, even as we're kind of taking a look at Apple, and Apple, even if we think about the past 2-3 months in the last quarter, this is a company that has flirted and entered into correction territory, which has really caught the attention of a lot of investors on some of that weakness as well here near term.
Yeah, it has. The valuation was one of the reasons here out of the four for this downgrade here from KeyBanc, saying that Apple is still trading, despite the pullback that we've seen, still trading at a large premium to the NASDAQ versus historical levels. So yes, we have seen a pullback like you were talking about from the peak levels that we saw during the summer, but still where Apple is traded relative to the NASDAQ, they're still saying it's too large of a premium compared to what we have historically seen from the tech giant. Also, weakness in the U.S. demand, you mentioned that, but slower international growth rates as well. Some questions there about what Apple is going to see demand-wise for its products from around the world. And then also there's the estimate. They view, at least the estimate is full on both the top and bottom line perspectives, lack of a near-term catalyst. There's a lot riding on that new iPhone model, whether or not that was going to be the catalyst, if it was going to be enough to get people off the sidelines and to upgrade their iPhones. Right. It's expensive. It's very expensive. Yes, it has a new camera that some people might get excited about, but judging by at least the initial reaction and some of the commentary that we're seeing from the street, maybe we should be bracing for another quarter-over-quarter decline.
I have a good camera, and, you know, I throw that in the bag whenever I travel. Yeah, the phone, and that is essentially what it is, right? Mm-hmm. You're just carrying around another camera at the end of the day for the people who don't want to go out and purchase a DSLR. However, you'll see the difference. All that said, the international growth is needed here for Apple. That's part of this note. You were mentioning that, but the trends here, they suggest some of the challenges, and particularly KeyBanc noting that consensus expects every single international segment to show accelerating year-over-year growth in fiscal year 24 versus fiscal year 23, though they struggle to understand why that will be the case. Well, I would point to one data point, at least here, coming from IDC and their mobile phone tracker, because worldwide smartphone shipments, they're forecasting them to reach their lowest volume in a decade. But iOS, that is expected to take on even more market share. I believe the record level that it could potentially climb to, 19.9% of the global market share. So that particularly is interesting, and that perhaps is one of the data points that would suggest that there is a lot more opportunity international growth-wise for Apple.
Yeah, certainly a name, obviously, that you got to keep on your radar at all times.